the banks are going to go down again. I think they're realizing that they may need gold and silver as a currency at some point again. You know, the Dow made an all-time new high last week. Right now, the markets still want to go higher. Fed funds rate, there's a 100% probability that they're going to, but we know nothing's ever 100%. But if they do cut rates, it's for one reason. It's to what I just talked about, increase the tax base. It's going to increase taxes that we're going to pay because it's going to bring back inflation to a higher level once again, which means that secretly, Americans will be paying more federal tax through the goods that they buy when they go to the grocery store, when they go to the gas station.
Recent scenario shows the banking sector faces recurring downturns, prompting a renewed interest in gold and silver as potential currencies. Meanwhile, the dollar recently hit an all-time high, and the NASDAQ shows resilience despite recent sell-offs. As the Federal Reserve considers cutting rates, there's nearly unanimous expectation it will do so. However, this move aims to expand the tax base by indirectly raising inflation, leading Americans to pay higher taxes through increased prices on goods. Todd Horwitz, a financial analyst and commentator, tells Americans are spending about 2% more than they earn, regardless of the specific rate of wage growth. For example, if wages grow by 5%, spending increases by 7%. This spending pattern indicates that many are unable to cover their expenses, including family needs, leading to a financial shortfall. Despite any wage growth, if spending consistently outpaces earnings, it becomes unsustainable, raising concerns about how long individuals can maintain this imbalance before facing financial hardship. The Federal Reserve is often seen as prioritizing its own interests rather than the public's, likened to a system that manipulates currency for its gain since the early days of central banking. Established in 1913 by influential families like the Rockefellers and J.P. Morgan, it has been accused of controlling the banking system for self-interest rather than the public good. Critics argue that rate cuts won't control inflation, but instead trigger a spike, effectively acting as a hidden tax that burdens the consumers and benefits the government. This, they claim, enriches politicians while taxpayer money is spent abroad, making the system resemble a Ponzi scheme. While Andy Schectman, CEO of Miles Franklin Precious Metals, highlights the LBMA, London Bullion Market Association, and COMEX, Commodity Exchange Incorporated, are being viewed as Ponzi schemes. The argument is that capitalism should allow weak banks to fail rather than bail them out. Bailouts should protect depositors, not the banks. The current system, where banks profit but still receive government support when they fail, undermines true market competition and rewards poor management. David Hunter, a few days ago in an interview, also argues that Europe, Canada, Australia, and Asia face greater economic risks than the US, with banks in worse condition globally. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
Americans are spending about 2% more than they're earning. Okay, whatever number you want to assign to it. If you say wage growth is 5%, then they're spending 7%. Okay, if you say it's 3.8%, then they're spending 5.8%. The bottom line is Americans are not making enough to pay their bills. They're not making enough to pay their family. So whatever number you want to assign to it, the bottom line is they are spending more. Look at the PCE that came out on Friday, the 31st or the 30th. Okay, they're spending 2% more than they are earning. So what does it matter what I'm earning? If I'm still spending more than what I'm earning, then the number what I'm earning means nothing because I still can't survive. And how many months, how many years will it take me to go broke at that same ratio? Okay, the Fed is more of a criminal organization. I'm not calling them criminals, but they're more interested in basically stealing from people. Look, you can go back to the 1600s in England when central banking started. They continued to wind down and manipulate dollars and money to make it worth less. Okay, so if you go back to 1913 when the Federal Reserve started by four very not good people, the Rothschild family, Paul Warburg, the J.P. Morgan, and the Rockefellers, they didn't have the interests of you and me at heart when they developed the Federal Reserve. Their interest was for themselves so they could control the banking system, which they have done. The Fed is really not independent, and I don't know if this is a political move or not. Okay, I think Ron Paul is right that we need to end the Fed or at least have a fair audit of the Fed and know what's really going on. But what they're doing now, the reason that they're cutting rates now is not because they cannot control inflation. They couldn't control it before, okay, by raising rates. So now you understand that everything that we buy has a federal tax base on it, right? There's federal taxes paid on every product you go out and buy. There's a federal excise tax on gasoline, food, anything you go out and buy. So by lowering the rates, we are going to see an inflation spike once again, and we're going to go back the other direction of what they thought was coming down. Now, we all know that inflation has not come down. It just was growing at supposedly a slower pace. We're going to get into a much speedier inflation curve again. And of course, really what that is doing is it's called the hidden tax of inflation. Because now, as we go to the store and have to pay more taxes on the goods and services that we are buying, it is lining the coffers of the federal government, which is continuing to piss our money away in places like Ukraine and in China and all over the world. And that is lining the pockets of the politicians. So it's more of a shell game or a Ponzi scheme, which is what we're watching what the Federal Reserve is doing. The whole capitalist system is based on, if you're not strong enough to stay in business, then you should be forced to close. Bail out the Americans and have their hard-earned money in those banks. Screw the banks. What kind of business model do you have when you can make billions of dollars? Okay, and if you go out of business, if you get into trouble, the Federal Reserve and the government are going to come and bail you out. Where does that make sense in any size of world? Does it make sense to bail out a business that is a profitable business? And if they don't make profit, they get bailed out by the Federal Reserve.
Lowering interest rates is expected to drive inflation higher, effectively acting as a hidden tax on Americans through increased prices on goods and services, such as groceries and gasoline. Despite claims that rate cuts will control inflation, it often results in the opposite effect. For example, since President Biden took office, gasoline prices have risen by 65%, and groceries are now 2 to 3 times more expensive. The policy of lowering rates to stimulate the economy does not reduce inflation, but instead burdens consumers with higher costs, leading to more tax revenue collected through inflated prices. Todd Horwitz briefly explains the NASDAQ shows signs of weakness, and if the anticipated rate cut on September 18th occurs, it could trigger an initial relief rally. However, this might mark the start of a broader market collapse, reminiscent of 2008, when reassurances of stability were quickly followed by a financial downturn. There's a concern that history could repeat itself with another market crisis. The idea that a weaker dollar is needed to boost exports doesn't hold up, as countries can simply lower their prices to remain competitive. The currency market is manipulated, with no tangible backing for any currency except government guarantees, which are unreliable given the financial instability of governments. It's advised by Todd that individuals own physical metals like gold, silver, and platinum rather than paper assets, as there's likely not enough physical gold to back all the paper claims. As confidence in traditional currencies like the US dollar and euro wanes, many are turning to alternatives, including cryptocurrencies and precious metals, to protect their wealth amid a broader shift towards socialist or Marxist economic policies. Let's have a look back to the interview.
And if you look at the Fed funds rate, there's a 100% probability that they're going to, but we know nothing's ever 100%. But if they do cut rates, it's for one reason. It's to what I just talked about, increase the tax base. It's going to increase taxes that we're going to pay because it's going to bring back inflation to a higher level once again, which means that secretly, Americans will be paying more federal tax through the goods that they buy when they go to the grocery store, when they go to the gas station, because we do pay federal tax on all goods and services. You pay federal tax on your income. So at the end of the day, all they're really doing is creating more tax dollars to be paid by Americans. Screw the inflation, because in what world does trying to stimulate the economy, okay, with lowering rates, bring down inflation, which they've continually said is out of control? All right, I happen to know that gasoline is 65% higher globally, or United States wide, higher in some places, lower in others, but 65% higher than it was when Joe Biden took office. I know groceries are 2 to 3 times more expensive than when President Biden took office. So in what world does lowering rates bring down inflation? It is in no world that happens. Should there be the rate cut that they're talking about on September 18th, I would believe there would first initially be a spike rally, a relief rally that it's finally done. And then I think that might be the beginning of the collapse. And this could end up being what we saw in 2008 when, if you recall, in September of 2008, Paulson came on Face the Nation and said the banks are safe and sound, everything's great. And of course, October, they weren't so safe and sound. And I could see almost an instant replay of that happening once again. Everybody should have some representation, ownership of physical metals, not paper. There's a big difference, because I don't think there's enough gold to cover. So what I would be doing is I'd buy some gold. And I think people are starting to realize between cryptocurrency and between gold, silver, and platinum, that you may need something as an alternative to the US dollar or the euro currency or any of the other currencies around the globe, because again, we're seeing a big shift. And really, unfortunately, the shift is more to either socialism, communism, or Marxism, which is not good for any capitalist.
In this uncertain financial landscape, relying on tangible assets like precious metals and maintaining a critical perspective on monetary policies becomes increasingly essential. As economic dynamics evolve, individuals must seek to safeguard their wealth against potential systemic vulnerabilities and inflationary pressures. How do Federal Reserve rate cuts contribute to inflation, and why are they considered a hidden tax on consumers? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.